Welcome back to the ROP course. In this section, I'm going to be going over Fibonacci. So Fibonacci shows you the full pullback. So I did post this on my YouTube, but I'm going to give you guys a little bit better of a understanding of how to trade Fib. So I'm just going to mark this up. So right off the bat, let's get into it. Okay. So we had our uptrend, right? Higher highs, higher lows, with our impulse up. Okay, so we could have had our demand right down here, right, lining up with our fib zones. Cool. Now, pretty much what Fibonacci is it's going to show you where you want to enter off. So, say we're on an uptrend. Okay. And no, that's not a good explanation. So say we're on an uptrend, right? There we go. And you don't know where to enter off. What demand zone's good? You want to enter off here. You're going to get stopped out. But if you want to enter in this part down here, you're not going to get stopped out. Or, a little bit lower of a chance of getting stopped out. A little bit more confluence on taking your trade. Now, with other confluences, it's really simply being put. But with just Fib, you could have a little reaction here. But price is going to take this out right here, this demand zone. Price will come back into this zone right here with our 7, 9, and our 8, 8, 6 zone. Price can make a reaction here, and then it's going to take off. Now, is it always 100% going to work? Obviously not, but pulling the Fib with your demand, with your supply, it gives you more of a confidence boost. It gives you more confluence to taking the trade. Now with supply, it's the same thing. Okay, where do we want to take it? Now we could pull this from the higher time frame. Let's pretend this cuts off right here. So don't worry about this mess right here. Okay, let's just focus on this move. Alright, because I can't erase this. So supply zone, not good. Supply zone, definitely not good. Many reasons being put, like imbalance, liquidity, okay? But the main thing is the Fib. The Fib shows you the premium discount of the move, of the pullback. So, you could have a little reaction here, boom. Little reaction here, boom. Now price, do this, and then fall. Just like that. Extend our Fib a little bit. So the Fib is literally just showing you where you should enter, giving you more confluence with your supply and your demand, which you want to take. There's many reasons behind not taking these, but the main reason being right now is the Fib. The Fib lines up with the supply, it doesn't line up with this one, it doesn't line up with this one. What do we take? The supply. So here's my descriptions that I just made for you guys. If you want, you can screenshot, do whatever you gotta do. Sorry about this, but can't do anything about that. So here are my levels, since I didn't even say that yet. I put this in my YouTube video, so I'm sure a lot of you guys already set these, but we've got the 0%, so that will be marked from either the swing high or the swing low. We've got the 0.79%, which is the start of the golden zone, the full retracement, the 0.886, the end of the retracement, and then the 1, where you put it at the either swing low or swing high, just yet again. Okay, so you don't want to enter anywhere else in here. You want to enter off this zone. Okay, that's it. 618, does it work sometimes? Yes, but if I show you, it's too high, you know. Yes, below the 50% pullback, but this isn't the most discounted level. These right here are the most discounted levels, so that's where you should be entering off. Simple, easy, got it, good. Let's go into the real chart. This probably isn't going to be a long video, just because I already did a video on this on my YouTube and kind of fully explained how Fibonacci works. But I'm going to give you guys a little bit more of a understanding of Fibonacci. So right away, boom, let's delete the 618 because we're not about that life. So what do we see? This was a major move from the swing high to the swing low. Now, and this is setup. The setup happened around, I think it was 3 or 4 on Thursday. I didn't have my limits set. I didn't have my alerts set. This was a 44-hour trade. I broke this down on my YouTube, and it was perfect. Am I kind of mad that I missed it? Yeah, but you know, it happens. So Fibonacci was pulled, right? We've got our supply right here. Extend this. OCD, so I need to make everything perfect. So the swing high of the move, taking out all this liquidity, to the swing low, taking out all these lows right here. It didn't take out this low, but it formed as kind of a double bottom. So that's major liquidity. Okay. So as you can see, price came up, came down, we marked the fib, we looked for the most discounted level to sell again, and look what happened. Price tapped into our supply zone and tapped right into our fib level on the 3-minute, and this is where I missed it, the 1-minute confirmation zone. We had right here, also in the fib zone. Okay, and this stops right here, and take profit could have been here, but once again, like I said, we want to take our profits at the low of the move. So boom, 44 RR, just from knowing which zone we want to take. If we were to take, let's go back on the 3-minute. If we were to take in this supply, we would have missed it. Boom, break structure. Okay. This supply was very bad. Okay, if you would have taken this, you would have got clean stopped out because the fib level was up here, right? Fib levels went down here. The premium level is up here. Price comes down, comes back to retest our golden zone, our premium discount, taps right in. You know, you could have entered right off the 3-minute, right here, without a confirmation entry, and it still would have been a 17R. People dream of having those type of trades, and we're getting them on 3 and the 1-minute. So I mean, it's pretty simple. Strategy's pretty simple, you know, it's not much to it, but the confirmation entry the fib lineup is simple. There's really not much to the fib, so I'm kind of like hesitating on what to say, but I'm just going to show you guys some more fib pulls. Once again, this move right here. So we're going to delete this because we already covered this. Screenshot, do whatever you got to do. I know it's on the 15-minute, but you just go back in the video. So we had supply zone, demand zone, right? We had the official low of the move from here to here. Could you have marked this up? You could have, but I mark up the swing low to the swing high, the full impulsive move. Okay, so you pull the fib, line up perfectly. If you want, could have had the 30-minute. I went over this on the supply and demand. I'm sure you guys already watched that because that was before this. But we've got the fib pull from the swing low to the swing high of the move. Price came back down, mitigated the demand zone perfectly, right? The 0.79 and the 0.886 tapped into our 50%, and then it continued up. So if you would have taken on the lower time frame, let's go back, would have taken this one, you would have been stopped out. Why? Because this was probably a 618 level, so we had to continue down a little bit more. So as you can see, stopped out and then tapped into our zone right here, and then continued up for the big move. So now I'll show you guys one more setup with the fib. Let's see. Okay. Boom. This was, I think, Monday. Had these buys marked up. Now, like I said, you could do just the body. You could do the wicks. Just for time being, video's sake, I'm just going to do the body. A lot of the times I do the wicks too, though. Just give me a little bit more breathing room, just so I don't get stopped out, because you can get stopped out a lot. Win rate might not be as high, but your RO will be way bigger. Okay, so what did we do? We had this being taken out, this liquidity. A new low didn't form, right? This was not a new low. It failed to break this. So were we looking for buys? So we pulled the fib from the swing low of the move to the swing high. Now what do we wait for? We wait for price to come back down to mitigate our premium discount levels along with our demand zone. Okay, so we'll back test and go back in time. So we wait. Okay, price taps into our limits. We're execution. Price taps into our fib level, clears all this imbalance right here, takes these buyers out. Now I don't know why this isn't working. I can't delete these. And what do we wait for? Price hit our TP. Boom. Okay. So once again, this might have even been a good one. No, let's not worry about that one then. Swing low of the impulse to the upside. That broke structure. To the swing high, the fib. We wait for the fib to come back down and line up with the demand zone with the 7.9 level and the 8.86 level. Price taps right in, hitting your limits, hitting whatever you need to do. You know, if you execute, you execute. If you set limits, then you're tapped in. Boom. Price immediately rallies up to take our profits and to hit this high of the move. So like I said, entry, demand level, fib level, take profit, the high of the move that broke this structure right here. So yeah, that's fibs. That's really it. Fibonacci equals premium levels of supply and demand. It will give you more influence on your trade. And also, if price breaks the fib, the trade is obviously invalid. You know, it's a game probability, so even if it's a perfect setup, it could still fail. You know, this one could have failed easily. Why? Because we had this double bottom right here, this liquidity, which price did end up, I'm pretty sure, coming back down to take this out. But we scalp, you know, we look for the plays that happen quick. Premium levels of supply and demand give you more influence. And then the fib levels that I use, 0.79 and 0.886. Premium discounted levels. That's fib. That's my levels. That's how you enter in off it. Line it up with your supply and demand. If it doesn't line up, don't take the trade. Hope you guys enjoyed this section. I'll catch you guys in the next one.